It's the Peter Schiff Show.
And we are back. This is Peter Schiff talking with David Frum of FrumForum.com and former speechwriter for George W. Bush. Anyway, before the break, we start talking a little bit about gold versus treasuries. And so, David, if people are buying treasuries and you're using the fact that people are buying treasuries as evidence that there is no problem, that the U.S. is solvent, yet you look at people who are buying gold,
I don't want to say
and the price of gold.
I don't want to say
price of gold,
obviously debt is a problem.
Let me finish my point before you respond. The price of gold, on the other hand, is rising. People who are buying gold are indicating that they don't think the government is solvent. So why do you think it's the people who are buying treasuries who have it right, and that the people who are buying gold have it wrong?
Okay, great question. And that is a fundamental question and one really of importance to your listeners, because we have a difference of opinion in the marketplace. So the question is, which of these markets looks more like the bubble, and which looks more like what happened in subprime gold or treasuries? So I would say, which of these markets is bigger? Treasuries. Which of these markets is less subject to manipulation, therefore, by a few dealers? Treasuries. Which of the markets sees more unethical practices by sellers, like subprime? And that's the gold market. That when you look at the behaviors of the companies that sell gold coins, the very fact they push gold coins on people rather than buying gold in forms that are, if you're going to buy gold, right, gold coins are the worst way to buy it. That you see so many unethical practices. And I'm sure this is not true of your show, but if you watch Fox News and you look at these companies and Glenn Beck and his relationship to Goldline and Goldline's business practices, the things that are happening, they're just like those unethical practices with the subprime.
Oh, you're absolutely right in the fact that people who are buying, and it's not bad to buy gold coins. If you buy Maple Leafs and you pay a few percent over spot, that's what we sell, that's fine. If you buy these highly marked up, supposedly antique collectible coins where you're paying a 70% markup, you're right. I think that is outrageous behavior. But that is a tiny fraction of the gold market. Right, that is as a result,
market,
as a
the gold
percentage
market itself is tiny.
I know, but that is
point. All the gold ever mined in the history of the world could fit inside a two-story house.
Yes, that's an argument for its scarcity. But my point here is that
it's not about argument.
If you're talking about hold on, David. Let me make this point to you. You're trying to make the case that gold is being manipulated because companies like Goldline are overcharging their customers. Goldline's whole volume, all the gold that it sells in a year, is a fraction of the daily volume in gold. It is tiny. These are just a few unsophisticated people getting ripped off by some unscrupulous gold peddlers. But there is far more manipulation going on in the Treasury market. If you look at who's buying U.S. Treasuries, you got enormous buying by governments. This is central banks using other people's money to buy bonds that real investors wouldn't touch. I mean, how could you argue that the U.S. government should be able to borrow money for 30 years at 3%, given the historic average yield on Treasuries, given what inflation is average, given how much money we're likely to have to borrow during that time period, how much money we're likely to have to print?
I think as you know, when the theory, and especially the kind of economic theory that you would hold, is if central banks are buying debt, that should lead very rapidly to an inflation, which would cause a rise in interest rates and a collapse in the value of the bonds. But that's not what's happened.
I would argue that inflation is there. It is not as rapid as it's going to be because.
It's invisible. I mean, I know this is.
It's not invisible.
Inflation, and if you look at this one price of this one thing, but inflation. No,
you're just choosing to close your eyes and not see what's there. I mean, one of the reasons that the price of gold is rising is because inflation is driving it higher. But you can look at other prices like
the price of Bordeaux is also rising. That is not a sign of inflation. That's a sign there's one particular thing that people are buying, and I think in the case.
But the price of everything is rising.
The price of everything is.
The price of everything is going up. Even according to the government, the CPI last year was up 3%. That is not no inflation, and I think the CPI is disguising a much higher rate of inflation.
Peter, 3% on the year. Are you claiming that? That's not right.
That's what the government claims. That was the CPI for 2011.
Let me look that up.
That's what it was.
We are in a situation where we are seeing stable prices, where markets are not anticipating inflation.
We're not seeing stable prices. I have people calling my show that run stores. They're telling me how much their prices are going up. Nobody is seeing stable prices. Where are you shopping?
If what has happened, and this I think really is the sign of the gold bubble, that when you have to have special facts to justify your investment there. I mean,
what special facts?
All do meet the market reality, and so the question really for people who have bought gold, the question for them is: should they be taking profits or should they be buying more? And
let me ask you, David, how much have you bought any gold over the last 10 years?
I have not. I bought a lot of treasuries last year.
All right, so you've got
I don't own them anymore, but I did have a lot last year.
All right, so you haven't bought any gold. I own a lot of gold. I've been advocating. I've recently have spoken to a lot of professional managers who manage $100 billion portfolios for pension funds, endowments, major people, and I asked them, how much gold do you have for your clients? Are you buying any gold in your accounts, gold stocks? Very little, hardly any, less than 1%. Yet all these people are buying a lot of it for themselves. So the people who manage money for a living are buying gold for themselves, but none of it for their clients. Huh?
Some are, and others have lost, like John Paulson, have lost a lot of money. The main thing I would say is don't
John
take
Paulson
advice.
Lost...
Here I would say, don't take advice from anybody who's trying to sell you something. And that is the thing I'd say to the people in the show. Do not take advice from salesmen. That's always dangerous.
If anybody, obviously anybody who took your advice not to buy gold in the last 10 years has lost money, haven't they?
By the way, I didn't advise. I have not in the past 10 years. I didn't take a view on it. I don't happen to buy it. I mean, I do have a position.
All right, but if somebody had asked you, if somebody had asked you when gold was at 500, should they buy it? You would have said no.
It would have depended who they are, what their portfolio was, and what form of gold. What form of gold? If in 2000, I bought potash in 2005. There are times when you make commodity bets, but commodity markets are dangerous places, and for a person to
but gold is a special kind of.
It is not.
David, gold is a special kind of commodity. Gold is a monetary metal.
It is a more manipulated
it's a monetary
kind of commodity,
metal.
and it's a commodity in a market where the standard of ethics is unusually low.
Well, if I gave you a choice,
people need to be careful.
David, if I told you I'm gonna, all right, if I said, David, I'm gonna put $1 million in a box and bury it in the ground, and you can dig it up in 10 years, or I'm gonna take $1 million today worth of gold and put it in a box, and you can dig that up in 10 years, which would you rather have?
I think we're going to find the price of gold is lower 10 years from today than it is now.
So you would rather have $1 million buried in the ground than the equivalent in gold?
Yes, I think gold will be worth.
I think 10 years from now there's a good. I think 10 years from now there's a good chance that the box that the $1 million is buried in will be worth more than the contents.